All right, they're getting us started. Happy Friday.
Happy Friday.
Happy Friday. So glad it's Friday. It was
Yeah.
a week like my whole house couldn't even get up this morning. Hi, welcome to
Hello.
Finance Friday. My name is Beth. This is Stephen, and we are here with Nova Wealth Management doing our Finance Friday. This is the show where we give you the information that you need to help create, grow, and protect your wealth.
Beautifully said.
As I said, I am Beth. I am work in marketing here, and Stephen is one of our advisors. So Amy got to skip out today. So,
I'll do my best Amy impression
oh
today.
no, no. See, if you call and you get me on the phone, sometimes, yeah, you people will think I'm Amy, and I'm like, oh, sorry, not Amy today.
Roll with it.
But you can't be Amy. I'm very sorry to say that. So.
One of a kind.
It was a big week for a variety of reasons. I obviously wear red every Friday because I remember everybody deployed. My husband was a veteran, or is a veteran, I should say, and did deploy to Bosnia. My brother was in the military, so obviously every Friday it's important for me to wear red to remember everybody who either did deploy or currently. Obviously 9/11 being yesterday. Talked about that a lot. Just it seems like every year we talk about it and the memories are
Was
so
that
vivid.
24 years ago?
24
Wow.
years ago that happened. So this week, though, on Finance Friday, we got a couple things. We're going over the jobs reports and how that impacted the stock market, because the stock market did have some movement, and also a bilge bracket,
Yes.
which you were like,
Bilge bracket.
am I going to Home Depot? I'm like, no, you're not going to Home
I was
Depot.
gonna buy it and bring it in.
I know,
Oh,
like,
this?
you're not bringing that to me. You're not doing that. Okay, so tell us about the jobs report and what that means. I'm going to share this out while you're
Sure.
doing
Yeah,
it.
so the jobs report, this is a monthly report that is issued typically the first Friday of every month. And actually, the official name for the jobs report is actually Employment Situation Summary.
Oh, well, that's
But
fancy.
that doesn't roll off the tongue.
No, it
So
doesn't.
jobs report sounds nicer. So the most recent jobs report that was issued, it was September. It was for the month of August. And the way that this works, it's actually two surveys that are done.
Okay.
The first survey is done at a household level.
Okay.
So they survey households. Now, actually, they survey 60,000 households
Okay.
every month.
Really?
And yeah, I thought it'd be a little bit more,
I
but
didn't know that.
so they survey 60,000 households and basically say, are you working? How long have you been working?
Okay.
You know, what's your demographic? So there's a lot of job questions,
Okay.
job related questions. So the main thing coming from that survey is things like unemployment rates,
Okay.
long-term unemployment, which
Yeah.
is an indicator
Yeah.
for many things. So that's the one survey. The second survey, they focus on businesses. So they survey businesses. They survey more, 144,000
Okay.
businesses.
Okay.
For some reason, they don't survey farmers. This is non-farm businesses.
Okay.
So
Okay.
they're more volatile
Yeah.
in what they do throughout the year. So it's non-farm businesses and government agencies. And the main metric that is published from that survey is just the total number of jobs added for that month.
Okay.
And I'll touch on that just as far as the most recent jobs reports, what that means and what it means for the stock market. So we'll touch on that in a minute. But that's basically two surveys
Okay.
every month, households and businesses.
Okay. All right. And so I know unemployment went up slightly, if I recall.
Slightly. It's the highest it's been since I think 2020,
Okay.
middle of 2020.
Wow.
So it's high. This was a weak jobs reports overall
Right.
for
Yeah,
a few reasons.
they weren't expecting it to be, I think, this dismal. So,
Yeah. So it's going to sound counterintuitive, but this weak jobs report is actually a positive for the stock market.
Really?
Yes, because what the Federal Reserve is going to do more
Okay.
than likely is lower the federal funds
all
rate.
right, makes sense. Makes
So
sense.
by lowering the federal funds rate, that's a better environment for businesses, for the stock market. So right now we're at all-time highs in the stock market.
Yeah, we are.
The Federal Reserve will be meeting the 16th of September, and there's almost 100% certainty that they're going to be lowering the federal funds rates.
So that's next Tuesday and Wednesday, right?
Correct.
The 16th and 17th they're meeting?
Correct.
Okay. All right.
We're anticipating what's called a 25 basis point reduction.
Okay, and what's basis points for people who don't know?
So right now, the federal funds target rate is 4.25 to 4.5%.
And that is
And
a rate that the federal government lends money out at, is that
Of course,
right? Okay.
the
bank,
commercial banks
excuse me,
lend to
banks,
each
yes.
other to cover short-term obligations.
Right.
So this is like a floor rate. Everything kind of ripples from there,
that, right.
like the prime rates, the mortgage rates,
Right.
long-term rates. It's a ripple effect from there. So right now it's 4.25 to 4.5.
Okay.
A 25 basis point reduction means it goes from 4 to 4.25 is that target zone. So
Okay.
0.25% is
Got it.
25
Is that
basis
basis
points.
point speed?
Yep.
Okay. All right. So that's good news for people. Like if they lower that, like your credit card rates could go down, but it also means probably things like savings interest rates would also probably go down too, right?
Correct.
Okay. So there's both ends. It's, I guess, good and bad when the rates get cut. Obviously, anybody who's looking for.
Well, you bring up a great point because I know we've had a higher interest rate environment for a long time.
We have.
And people are like, 4 or 5% interest on my cash. That's fantastic.
Mm-hmm.
With interest rates coming down, we're anticipating 2 more interest rate reductions before the end of the year and multiple next year. You want to get ahead of this as far as, once rates come down, then I'll put it in the stock market.
No.
By that time, it's already
Yeah.
priced in and it's too late. So you
Right.
want to get ahead of that. So if you're sitting on a lot of cash, definitely give us a call and let us know then.
So now that you brought up the market, so with those rates being cut, markets tend to like that, if I understand it. So last week, even though we had this jobs report that didn't really show everything was going great, the markets are doing pretty well.
Because they've built in that potential interest rate cut.
Okay.
So this is going to sound counterintuitive as well as if we get a positive jobs report, like a strong jobs report, the Fed more than likely won't lower interest rates.
Because it shows we're doing well. Okay.
Right. The Federal Reserve, they have what's called a dual mandate. So the first mandate is to maintain full employment in the economy.
Okay.
Their second mandate is to ensure price stability, so inflation. So sometimes those two go against each other. Sometimes they work together as far as what decision they make.
Okay. So from what I understand from you, it sounds like even though we've got this potential rate cut coming that might be driving the stock market does like that. In a weak jobs report, like it sounds like everything's kind of, as you said, as you called it, baked in already. So people shouldn't be sitting on the sidelines if they're on the fence. That's where they need to reach out to their financial representative and say.
So right now, things are looking okay. We're trending towards what's called that Goldilocks scenario. Have you heard that?
No, Goldilocks.
Or a soft landing. Have you heard that term before?
No.
So
this is all good stuff.
So what we want to do is we want to be able to lower interest rates responsibly before we see a recession. So lowering interest rates could cause inflation. So to lower the interest rates, you give more incentive to borrow, which could increase the money supply, which could cause inflation. So we got to make sure inflation's good, but we want to slowly reduce interest rates, but not to the point where, we're in a recession. Now we really got to lower interest rates.
Got it.
So it's that kind of Goldilocks soft landing. So we're trending towards that now.
That makes sense.
Yeah, we're trending to there now. If something happens where we go one way or the other, then that's an issue.
Okay. All right.
So you got to have a plan.
Got to have a plan. It's always good to have a plan.
I like planning.
That really, if you want to sum up, Stephen, there you go. So I mentioned to you earlier in the week, I said we're going to talk about bilge brackets. So you went, I'm sorry, what? What are we talking about again? So
I had to research it.
Yeah.
Because I know underlying what it's referring to. So it's basically what's called a pump and dump scheme. Actually, before I go into what that is exactly, so I looked up bilge brackets, what that means.
It took you to Home Depot?
It took me to Home Depot first, but it's actually a seafaring term. So it refers to the bottom of the boats where like the dirty water, the rats are. So it's like the bottom of the barrel, the bad,
That's an image,
yeah,
Stephen.
yeah,
Thank
the
you.
nastiness. And so what it refers her to these companies that are like little dirty companies doing
Okay.
things that aren't,
Yeah,
hunky dory.
makes sense.
So what the pump and dump is let's say that I want to implement a pump and dump scheme and I want to do it in some Chinese stocks. I'll buy a bunch of low Chinese stocks,
Okay.
buy a bunch of them, and then say, Beth, I've got a great investment opportunity.
Sounds like Wolf of Wall Street.
It's exactly the Wolf of Wall Street. So if you've seen that movie, that was a pump and dump scheme.
Okay.
They knew that they had all these shares. They pumped it up, the price of the stock, and then they unloaded their stock and
Okay.
made a bunch of money. So if I ever call you saying I've got this opportunity in North Korea, it's really good, just hang up the phone on me. I would never do that.
We're bringing this up because the SEC is now starting to crack down on this a little bit more. So they are launching a task force that holds these firms accountable. So SEC is looking out for investors. That is one of their jobs. So
They do good things.
I'm happy to see. I know sometimes you think SEC, and you're like, oh man, come on, but hopefully it does, because we don't want to see anybody. It hurts us. It really does when we have people that come in here and we find out how they've been taken advantage of, and it really just breaks our heart to know that. How could you do that with somebody's hard-earned money, somebody's investment, somebody's retirement, somebody's inheritance, whatever it is? How could you do that to people? So
We have spent years building our reputation, and
Correct.
it just takes one thing, us doing the wrong thing, and that reputation is ruined. I believe in karma, so I know that people that do that kind of stuff,
I know.
they've got it coming.
I know. It's just still.
It's unfortunate. We've seen it a couple times
We
this
have.
year. People coming in
That's
and
true.
they've lost their money.
Yeah, we had a couple that came in that were part of a Ponzi scheme. And then we also met somebody here in the last few months that they went to an organization and they tied up the majority of their money in annuities. And
Yeah.
so they don't have access to
They
their
didn't understand the product, the investment,
Yeah. And that was.
and they were sold
Yeah.
instead of advised.
So that's part of the difference between somebody who's going to sell you something and somebody who's going to educate you. And here at Noble Wealth Management, we always want to make sure that you have access to information to make the best decision for yourself, whether you're a client of ours or not. But we also want you to know that it is okay to ask questions. It is okay to not chat GPT it and find another trusted advisor. Chat GPT is great for
Recipes.
Okay, so I did this because I don't. My strength is standing in the kitchen and watching people cook. It's not cooking, but I will use ChatGPT to help me with things like that. But when it comes to things, whether it's your health or your finances or things that kind of are a make or break it situation, that's where you need to find a trusted person that you can use, and it doesn't have to be the person that you've always used. I was talking to somebody earlier this week. They said, well, I've had this trusted advisor for 35 years. I said, that is fantastic that you have that relationship. Don't forget that you can always ask questions to somebody else. That doesn't mean you don't necessarily trust them. It's a check.
I hear that all the time. And it's hard to find good advisors. So if you've got an advisor that you've had for 35 years, keep them.
Yeah.
But something to keep in mind is, when are they retiring? And do you have a relationship built up with the successor advisor coming up? If not, we'll be the kind of the secondary advisor. Obviously we want to be the primary, but you really need to build up a relationship with another advisor if that advisor is nearing retirement.
Right. So,
I see that all the time.
And we also know too that we're out there in this industry, that there are people that are working at other firms and maybe aren't happy there, or they kind of feel handcuffed. That's how Jim and Amy started Noble Wealth Management.
That's how I came here.
That's how you came here too, is that if you're in that situation, you can always reach out to us here at Noble Wealth Management, because we are, as I said with Amy last week, I'm like, we're a vibe. we're a vibe. We're a thing.
It's really true. The prior firm I was at, I never brought up ideas or anything like that because I already knew what the response would be. It would get shut down almost immediately. But here, I can come up with ideas. Hey, should we look at this? And we spend an hour looking at it, and
seeing if it's
just
the right move.
it's a really good collaborative environment.
And we also work with your CPAs or other financial professionals that you might have in your life, bookkeepers, attorneys. We like to have that collaborative effort with all of them to make sure we're getting the full picture
You need it.
of what you're doing, because it's never a one size fits all. Medicine, finances, even construction, thinking about building houses and whatever else, like it's never a one size
I
fits all.
can't chat GPT that. No,
I wouldn't suggest it. Might be able to YouTube video. But that's what we have today for our Finance Friday. Our jobs report, that information on the stock market, and a bilge bracket. So if you ever have any questions that come up, you can always send us a message here on our social media channels. You can email us at info@novawealthmanagement.com. It actually does come to me, but other folks do have access to that email. Give us a call. Yeah.
thank you.
Anything from you? Okay.
I'm good.
So enjoy your Friday, and we appreciate you guys hanging out with us. Have a good rest of your day. Bye.